Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show. Joining us today are Kalra of Target Investing, Nirali, Shah of Samco Securities, and T.S. Harihar of HRBV Client Solution. He's a little late, but he'll join us in a while. On the show today, we discuss Sun Pharma. The stock was among the top performers on trade yesterday after the Morgan Stanley double upgrade. We discussed whether the worst is over for the stock. We also discussed the way ahead for UPL as benefit from the Arysta acquisitions begin to kick in. What exactly is happening? The two stocks which continue to become are pretty much neck to neck to become India's most valuable company by market cap. Reliance and TCS both have market cap in close to 8 lakh crores. Who will emerge much higher? What are the triggers? And we talk about, we are in the midst of the earnings season. So we talk about one stock that our analyst guest expect that that company will post strong set of numbers this time around. But let's start with the first one, and that is Sun Pharma. Has done extremely well. The Morgan Stanley upgrade that came in yesterday. Today it's trading flat in trade. Yesterday managed to move, but it's up almost more than 10-12% in this month itself. So there is a lot of rally that's coming in on the pharma stock. So is the worst over for Sun Pharma, or is there more pain left? Samir, I'll start with you. You've been tracking Sun Pharma for a while. I believe you also have it in your portfolio, or you had it in your portfolio. But what's the sense now? Nothing seems to be working much for Sun Pharma. Are things changing now? Are you seeing that things will become better, or will they get worse?
So I think things will get better only. If you want to see the worst, the corporate governance issue, the timeline ends this quarter. So that should be financially also overdone in the results. So I think that can have a spillover from the previous quarter. If you remove that impact, the last quarter results were better off than the estimates. If the US generic drug prices, which we track, have bottomed out and are showing some kind of improvement last 3 months, so we feel that kind of a pressure is also coming off a bit. Third is the specialty drugs. They are getting into process now. It's going to commercialization end, so that might unfold in next 12 to 18 months. But I see the bottom coming out sooner. But I'll still wait for a quarter or two to get the confirmation of that bottom in the numbers as well, and the corporate governance issue as well.
Do you all hold Sun Pharma in your portfolio?
We still hold Sun Pharma in our portfolio.
And what's your overall sense on the pharma space? Because US seems to be shrinking. There's nothing much happening. The domestic IPM numbers that came out did indicate that there is clear slowdown there. Should anyone bet into the pharma space? And if yes, we discussed Sun Pharma. Is there any bet that they should take on the pharma space?
So I think as a whole, pharma companies, they have two problems coming on them. Now, even if any kind of revival comes, the balance sheets have been stretched in past 2 years because of a lot of US FDA issues and the pricing issues. Now everyone cannot invest in every pharma company, because now you have to go very specific where the cash on books or some kind of liquidation is happening. Like Dr. Reddy's is selling out their non-core portfolios slowly and slowly. So I think that is one place. And Lupin for me becomes the third company where I'm still keeping it on the watch list. I'm not going and buying it right now. Out of the only positions I have is Sun Pharma in the whole space.
Okay, what's your sense, Nirali? What's your sense on Sun Pharma? You think that things are getting better for them, or should people stay away?
No, even I feel that things are getting better for them. Now, if you look at the Taro and Illumia business, Taro is coming up with new launches, which we expect it to stabilize after 2 years of consecutive declines.
Okay.
And Illumia has better positioning, has a niche positioning, and the market is also underpenetrated for biologics, so which will be beneficial. Also, they have 118 pending ANDAs in the generic segment, which will also boost their sales. And if you look at their measures, cost efficiency control measures, they are actually doing critical rationalization of their R&D and shifting towards specialty business. And if you see their SG&A sales, which is around 40% of their total cost, that is also expected to stabilize.
Okay.
So because of all these reasons, and also they have transitioned from their distribution business of Aditya Medisales, and because of these things, we feel that it is a good time to get in on Sun Pharma.
Overall, what's the sense that you have on the pharma space apart from Sun Pharma? Are you telling your clients to start accumulating any of the other pharma stocks?
Yes, like at least from a longer term horizon, pharma is a good space to be. But at present, except for Sun Pharma, we're not really looking at anything.
Okay, that's the view that's coming in on the first stock, and that is Sun Pharma. The second stock we want to talk about is UPL. Now it's been all over the place, you know, some bit of positive news coming in, some bit of negative news coming in, but off late has corrected significantly on the back of a lot of negative news that came in terms of how they will be able to, right now concerns are now coming in again, how they will be able to, pay back the debt as far as Arysta is concerned. The other factor is weakness in China, weakness in Africa, weakness in the core business of Latin America. So what's the view on UPL? That's something that we'll ask our guest. No doubt it's up almost 30% as far as this year is concerned. But Nirali, what's your sense on UPL? Have you tracked it? What are you telling your clients?
Yes, so about UPL, it's been facing China issues, and recently one German chemical company also said that they are expecting a decline in their profit for this year. And because of these reasons, the stock had corrected. But if you see, this is an overreaction by the market, and I feel that soya business is 12 to 15% of their sales. And if you look at the Brazil and Latin America exposure is even less. And looking at UPL's diverse portfolio, the corn acreage is expected to make up for the loss in soya bean. So because of these reasons, UPL is going to benefit. Also, because of the China and US tensions, there is higher tariff on the pesticides export from China, which will again benefit the herbicide business of UPL. And the Arysta acquisition is going to be a major synergy booster in terms of the top and bottom line. But because if you see UPL's chart, it is in the range of 580 to 700 levels, and there is little margin of safety. So as of now, I would suggest our clients to maybe wait and buy on declines. Okay. And accumulate in a staggered manner, like don't jump into the stock right away. Okay,
Hari, welcome to the show. I think traffic kept you away, but what's the sense? We just discussed Sun Pharma, which I will ask your comment on later. But UPL, what's your sense? What do you make of it? Because it was doing fabulously well, and then came all these concerns again in terms of slowdown in certain areas they operate. What should one do with UPL?
See, I think more than slowdown, it's a matter of some of the recent rating downgrades that have happened on UPL, including the one that Fitch has done, largely because they believe that the $4 billion acquisition of Arysta is going to put a lot of financial pressure on UPL. I think prima facie, probably in the short term, there is going to be some financial strain. But let's look at it this way: over a longer period of term, this has actually positioned them as the largest, crop protection company in the world, because Arysta and UPL were the largest. Now they combined, they are the largest in the world. So I think that gives them a big benefit of scale as far as the American markets are concerned. And I think over the period of the next 2 or 3 years, it's going to be substantially accretive both in top line and bottom line. So I think at 620, I don't know, whatever is the price, we don't see too much of a downside risk in the stock, and we have actually been continued to be bullish on the stock.
Okay, what's your sense, Samir, on UPL?
So I think the aggression on the acquisition came at a time where everyone was optimistic about the diversification post the acquisition. Now that diversification is hurting your cash flows. So your basic business, which is the traditional, the standalone business which you are running to BASF and all, they are facing downgrades on the revenue. Profitability is the second point. The revenue downgrades are coming up. So that hurts your cash flow to service the debt which you've taken into your calculations. And secondly, I think even the domestic business, the monsoons and seasonality impacts the cash flows a lot. So I think debt servicing might happen on a regular basis, but for that, the burden on the books will be even further higher. And if you see the balance sheet of March ending and the September ending, the receivables have stretched a lot. So I think there's a lot of cash flow problems at the company level. The revenues might sustain, might show a downside on a quarter-on-quarter basis, but I still feel it's a better place to exit rather than the entry point.
Okay, Hari, are you seeing any kind of problems as far as the balance sheet is concerned, if you've seen the balance sheet of UPL?
See, as I said, short term there are concerns because I think that the debt service burden is going to be quite large. But as I said, if you look at the next 2 or 3 years, it's going to be accretive both in the top line and the bottom line. So short term, yes, I would agree that there are some concerns, but medium to long term, I don't see too many concerns as far as UPL balance sheet is concerned.
Okay, that's the view that's coming in and before we move on to the next stock, let's also ask Hari what his view is on Sun Pharma. We were discussing that the counter has corrected significantly over the past few days. Again, there has been a rally on Sun Pharma. It's moved up more than 10% this month itself. Do you believe that the concerns are now overdone for Sun Pharma? Is it a good time to start accumulating?
See, I would have said yes, probably 10 days back, but if you look at the stock price, I think it's rallied about 15% in the last 15-20 days. So that's to me looks to be a little too much at this point of time. We do believe that there are some things that are positive, and the biggest positive for me is not so much about the Morgan Stanley upgrade, but about the fact that finally the Sun Pharma group has decided to get out of 2 areas. Number one, they've got out of NBFCs, which I think is a big. We always had concerns about Sun getting to NBFCs, and number two, they have this huge corporate governance issues of that group companies becoming a marketing front. I think all that is resolved. So the corporate governance issues are out, the NBFC diversification is out. So I think as a corporate, we are happy that Sun Pharma is back to the core pharma business. So I think that is something we like about it. But having said that, I think after that 15% bounce, I would believe that we would probably wait for a dip before buying Sun Pharma at this point.
Okay, that's the view that's coming in on Sun Pharma. Another interesting, actually 2 stocks which are now neck to neck as far as becoming India's most valuable companies concerned, and they've moved out. The third one is HDFC Bank, which is a 6 lakh crore market cap. Reliance and TCS at 8.5 lakhs. So TCS currently is probably slightly ahead of Reliance. Probably Reliance must have gone ahead because of the move that we've seen in TCS. But it's neck to neck. Who will emerge faster, which is a better company to bet on at this point of time, probably take the first step towards becoming the first company with a 10 lakh crore market cap. Hari, which one would you bet on? If given a choice, you had to put all your money, don't say half here, but which is a clear preference between TCS and Reliance for you, and why?
No, clearly it's RIL.
Okay.
I've been saying for quite some time that you have a TCS which has the same market cap as an IBM today. You can always argue that Amazon is $1 trillion company, etc. But let's understand. I think TCS is not Amazon. TCS is still a company which relies largely on BFSI, less on digital. I would say a software outsourcing company which is probably getting its nuts and bolts together. So having said that, I think TCS at the same valuations IBM to me goes somewhere against the whole concept of legacy in the software business. So I would be a little skeptical. Number two, if you look at the latest quarter results, I think TCS had actually given a disappointing set of results. Growth under pressure. I think margins under tremendous pressure. If you look at the operating margins down about 200 to 250 basis points at the OPM front. So I think the pressure is beginning to show. The best of probably the software cycle is already factored into the price, so we don't see much upsides. On the contrary, RIL, I think there is a big SOTP story still to play out. I think the telecom story is still partly played out, retail is partly played out, and they are still maintaining strong petchem margins and strong GRM. In fact, in this quarter, I think GRMs are expected to go up by about 50 cents. So we would believe that if you're looking at target 10 lakh crores, I would probably bet on RIL reaching there first.
Okay, what's your sense, Nirali, which is a better stock? If someone wants to put their money right now, which is a better stock?
I would say TCS, because so actually there is one big risk we see with RIL, which is 80% of its sales are coming from the oil and petchem and refinery business. And if you look at, they are focusing a lot on their Jamnagar refinery. In the current budget, the government put like 10,000 crores for the EV, which will actually decrease the demand of petroleum products, because the future of fossil fuels and distillates like petrol and diesel are at risk. And on one hand, RIL is betting big on their Jamnagar refinery and spending on it. and the demand is decreasing. So they will have to tweak their refinery setup so that there is a higher proportion of maybe polyester based products and less on petroleum. Also, it is an asset heavy model and they have debt on their books, plus they have to do capex for their digital business. So because of all these reasons, we feel TCS has a better hand, and it is into the services business, asset light model. Also, if you see, the digital business is growing at 40% and that forms around 32% of their sales. So we are really bullish on TCS as compared to...
What did you make of the results that came off TCS? Nothing exceptional that came out.
Right.
There were concerns on margins, there were concerns on some of the geographies and some of the services that they operate in. Is that something... Were you happy with the TCS numbers?
So not exactly happy, but they were, I would say it was in line. It was not... something really disappointing. So
okay, before I go to Samir, Hari, I just want to come back to you because we've seen that the core business of Reliance is seeing a slowdown, be it the petchem, the refining business. Somehow they are betting big on Reliance Jio, the Reliance Retail, but they don't add up too much to the core bottom line of Reliance. Is that a valid concern that when your core business itself is slowing and that we've seen over the past 2-3 quarters, is that a concern that someone should have?
See, I wouldn't read too much into it. I would probably be worried if the GRMs were to fall substantially. I think Reliance still maintains a GRM spread of about $4.5 to $5 above the Singapore benchmark. So I think as long as that is being maintained, I wouldn't be too worried about as far as the Reliance core business is concerned. And even if you look at the last 2 or 3 quarters, I think petchem margins are still intact. I don't think there's any dent to the petchem margins. I agree with you that at some point they'll have to start factoring in the capital cost of Reliance Jio, which will probably dent their margins. But I think that is more or less taken care of and should be largely taken care of once the Highwalk Jio into a separate unit and come out as an IPO for Reliance Jio. So I would probably believe that the concerns on the oil front and the petchem front may not be too serious as long as they're able to maintain the GRMs at these levels.
Okay, what's your sense? Which is a better bet right now, Samir?
So I think right now, RIL is a better bet because this year I take that they'll help on the monetization of Jio and retail, whether it was through Invit for the Jio tower or fiber assets, which they've already done. When they bring in the investor, that's a whole different story. On the traditional business, I think everyone has factored in that the GRMs are lower and the lowest. This quarter might be getting impact because of the shutdown at the maintenance at Jamnagar. On the other side, if you see the retail end, I think the incremental profitability and the EBIT is coming through Jio and retail end. So that is more important, that how incrementally you're getting support to the higher growth of profitability. And I think that's much more sustainable than depending on the traditional business to work out for next 10 years as well. So I think next 12 months you'll see RIL performing better than a TCS.
Any concerns on TCS such or?
So the concerns were two based as per the results. The BFSI, now if I compare with Infosys and TCS, the BFSI growth in Infosys was much better and compared to TCS, though the deal wins were higher in last year. So I think somewhere the deal wins are not converting into the billing as much as they hoped for. Secondly, when your billing is not converting, your employee strength is increasing and you are almost at the 5-year high. What reason is behind that kind of a hiring spree? I have no clue, because you're eventually buying more raw material and your revenues are not going as much as you want.
Okay.
So I think over there that kind of a disconnect is there, and the buyback clearance is still not there. How they want to.
Okay, that's the view that's coming in. Two of our guests are preferring Reliance over TCS. Nirali is preferring TCS over Reliance. But nevertheless, both of them are neck to neck as far as market cap is concerned. And the final stock we want to talk about, we're in the midst of the earnings season, or just started with the earnings season. Some of the large caps have already come out with numbers. We're asking our guest which is one stock that they're keenly watching out for in this earnings season, and they believe could come out with a very strong set of numbers. Samir, I'll start with you only. Which is that company that you think that will post strong numbers?
So I think for me, Deepak Nitrite will be that company.
Why?
Because the capex which they did 9 months back and they completed. Now that commercialization of phenol and acetone now has reached almost 100% capacity utilization from 80 to 85 in previous quarter. So I think that will come into the volume numbers, and that will come on the consolidated basis. And there might be certain kind of a margin expansion as well because of the pricing which they were able to maintain on the long-term contracts rather than the spot.
Okay, what's your sense on, because there were a lot of concerns also on the spreads which are falling on this field on asset turn?
So I think those were 6 month averages which everyone talked about, and over there I think it was more of overreactive nature. And I think even if you're putting a IRR for like 1600 crore capex, you're looking for next 4 years kind of a payback period. And that really doesn't impact the needle that much. So I think till the time they maintain that margin, it's more important for me to pick for a throughput volume rather than the pricing impact right now.
Okay, what's your sense, Nirali? Which is a company you believe that could probably come out with a very strong set of numbers in the first quarter?
I'm betting on Ultratech Cement because cement is in a good cyclical space right now because of the boost for the infra and even currently housing boost of 19 million houses to be done. And if you see the Century Cement asset acquisition and the Binani acquisition in combination has given Ultratech a 20% market share pan-India.
Okay.
And also they are betting big on expansion. So the Binani asset is going to expand, is going to be very attractive for brownfield expansion. So because of that, and now if you see, they are also focusing on improving their cost efficiency. Like they have started waste recovery heat systems and wind and solar, which if you see it's like 88% of power requirement is through that, and we expect that it's going to be 10% going ahead. Also from a valuation point of view, Ultratech is currently at 16 times its EV by EBITDA, whereas if you compare it to Shree Cement, it's around 26. So I feel that Ultratech has a good chance to grow.
It's expensive than ACC Ambuja. It's one of the expensive stock. You leave aside Shree because it's expensive.
Right.
But Ultratech is not cheap by any sense.
But I feel that it's the leader and it has the potential.
It deserves that premium.
Exactly.
Okay, Hari, which stock are you watching out for this?
Two, we like Larsen & Toubro, and I think that is one stock that's going to give a very, very positive. We're expecting about 40% growth in profits YOY. I think that seems to be par for the course as far as L&T is concerned. Largely because of a very strong order book position, a strong growth in order book position, and I think more importantly, we are looking at gradual improvement in capital cycle, including oil spending has been a very, very big positive as far as L&T is concerned. So I think L&T could be one a stock company we believe could be have a very big positive surprise as far as this quarter results are concerned. The other is SBI, although I would still be a little careful because you can't be too sure till the last minute what the government will do on some write-offs or these are issues that are not exactly in your control. So I believe that SBI has had a good quarter. Their advanced tax numbers have been good, so they had a good quarter. But ultimately, what they announce, it will depend on how much write-offs is something they choose to take. So L&T is something we're very confident. SBI is something we expect to announce good results.
Okay, that's the stocks that have been spoken about. There is SBI, there is L&T, there is Deepak Nitrite, and there is Ultratech Cement. So these are the stocks probably which will surprise on the better side for the numbers this time around. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in, Hari, Nirali, as well as Samir. Thank you so much for coming in today. Our Speak You comes up next. Stay tuned to Bloomberg Quint.